Hey everybody, it's Pete. Welcome to a new episode of Stocks for Breakfast. Thank you so much for joining me here today. Today we're going to talk about trading edge and what it actually means and how it actually keeps you sane. We recently had a tougher trading day, and it was interesting to see some of the newer members, excuse me, and also some of the members on social media who are kind of on the outside of the boot camp, where they're just kind of getting the periphery of the ideas, but being so quick to say, that one didn't work, that one didn't work. And that's really just taking everything out of context. It's kind of like reading one page in a book and saying, well, that book stinks because you didn't like that page. When you have an edge, when you really have a proof in your strategy over time, where you've actually followed the plan and over time it makes money, that literally means, the definition of having an edge literally means that there's going to be losses. An edge does not mean 100% of the time in reality. It means that over time, if you flawlessly execute the plan, if you only take trades that match the edge, over time, if you manage them properly, you should make money. Now, the common numbers that are tossed out there are 3-to-1. 3-to-1 risk reward ratio, and then there's win-loss percentages on top of that. And if you are a basic math geek, which I think you have to be as a trader, you'll intuitively know, never mind actually factually know, that if you earn 3 on your winning trades and you risk 1 or lose 1 on the trades that don't work out, the math just works in your favor, even at a 50% win-loss percentage. Now, I want to drill this home because it's very easy to cherry pick and say that trade didn't work, that trade didn't work, when there's just 1 or 2 trades within the context of 100 that you might make over the month, depending on how active you are, 100 over the year. And it's that difference, that real deeper thought process that super professional active traders have. It's that they don't care about the losses. I just can't stress this any other way. If you actually have an edge that works over time, the losses don't matter. Stop beating yourself up over that trade didn't work, that trade didn't work. If you just made money 20 days in a row, which is very possible, if you just made money 20 days in a row, or you just made money 10 days in a row, I'm going to bet, without even knowing you, the odds are all of those trades weren't profitable. It means that you had some winners, you had some losers, but at the end of the day, you came out positive. Now, I had a conversation this weekend with somebody who's a really experienced trader. The guy's been around a long time. And we just had this conversation because it was burning me up a little bit, how some of the social media, a little bit more than in the boot camp, because in the boot camp, we're pretty solid with understanding that it matters over time. And we talk about 10 perfect trades and that kind of stuff. But it kind of burns me a little bit when it gets cherry picked. And if you are one of those internet people who are only like can't wait to talk about, oh, you were wrong, you were wrong, you were wrong, that means that you're not trading. It really means that you're not trading, and you're certainly not trading full time, or trading in a way that will give you success over time. And look, I got to call you out on it, because if you're focused on saying that one was wrong, that one was wrong, and ignoring all of the winning trades, that means you don't understand edge. So what I'm going to talk about today is I want to kind of like just bring it back so that everybody has a solid thought process on what it means to place a trade, why you should never hesitate on a trade. And when you get out of a trade, it's not a big deal. It's just simply a part of what it means to accept risk in exchange for making money. So I'm going to head over to the screen. We've got a little, a quick math that we want to just cover here, right? So even on 50% win-loss ratio. We get this asked all the time, what is your win-loss? What is your win-loss? But the win-loss is not really relevant unless it's in the context of how much you make during your win-loss, right? So if we use some basic numbers, and if we use a 2-to-1 risk-reward ratio, right? That means for every $100 you make, you're going to lose 50. So that's 2-to-1, right? So that means that every 2 trades, okay, so what that means is $250 net profit just on a 50% win-loss ratio and a 2-to-1 risk, okay? So for every 5 trades, you're going to make 500. And every 5 trades, you're going to lose, you're going to lose 250. So that's where this net profits of 250 comes from. So even with every other trade, 2-to-1, right? One winner, one loser, 2 winners, 1 winner, which is not a monster number, right? So 2-to-1 risk reward simply means that you earn 100 and you lose 50 every other trade. Okay, very simple. Now, if we increase it even just a slight amount, which every trader should be doing, is having a good risk reward, is to 3-to-1. And you could calculate this before the trade. You should know your reward potential, right? So still sticking with 50%, which, by the way, 50% is not exactly shooting it out of the park, right? This is actually a really reasonable number. So that means on every trade, 5 trades, you'll make 150. 5 trades, you'll lose 50. So that's where we get 3-to-1, right? So that equals $500 in net profits. So what am I trying to get across here? It simply means this. If you are trading where you're at least 50% winning trades, 50%, and even if you're only earning 2 for every dollar you make, you're still profitable. But think about the deeper part of what I just said. That means that you're admitting you're going to have losses within the context of any strategy, but as long as you follow your plan of 2-to-1 or more, obviously better than 2 is better, but let's just all the way down to 50%, which is a coin flip, and you're only making 2-to-1, you're still profitable. But that's not the point. The point is you're admitting losing trades are a part of a strategy. You're admitting a losing trade is a part of the edge. But now if you expand it a little bit more, where you're still only 50%, but now you're 3-to-1, where you're learning to hold your winners a little bit longer. You're flawlessly cutting your losses. You've just increased your profits dramatically. You've doubled your profits on those same trades, still admitting 5 out of 10 trades lost money. So the next time that you're quick to say, why didn't that one work? Why didn't that one work? You have to stop that. You have to stop that and say, that's one of the 10. And that's why we always talk about 10 perfect trades. So you're not thinking about in thousands of trades, 1 perfect trades. That's one of the 10 perfect trades. So the whole point of what I'm trying to get across here is if you experience some losing trades lately, if you maybe even experienced a day or two, it doesn't necessarily mean you're not a good trader. It doesn't necessarily mean you need to rebuild your entire strategy from scratch. You need to listen to basic math. Basic math is what are you earning when you have winning trades, and is that in line with what you normally risk on those trades? Now, the risk part is kind of easy, right? You're like, that's how much I want to risk. The challenging part for most traders is getting to the point where you're earning enough on your winning trades, so accepting risk is not that big of a deal. The challenge a lot of traders have is they don't understand order flow, they don't understand tape reading, and they're not making enough on their winning trades, and they're essentially risking $1 to make $1, which all of this math basically doesn't work, right? So that's what you really need to do now. If you really want to take this to the next level in your personal trading, first and foremost, understand it's about basic math. Second, understand how to make more in your winning trades. And number 3 is don't worry about what your win-loss percentage is. If it's 50%, that's still good. Should you try and improve that? 100%. Learn how to read order flow and increase and stack those odds a little bit higher. But really, honestly, the single biggest reason that most traders are struggling or not seeing the results they want is, number 1, they don't have an edge. Number 2, they don't follow the edge, because having one and following is something different. And number 3, which is a big one, is not earning enough on the winners. And once you have those 3 pieces down, then really the last part is just accepting the fact that there's going to be losers in exchange for those winners. So I just wanted to start the week out that way because there's been some challenging days recently. And I just wanted to reset everybody mentally that it's about the math. And if you took losses that are acceptable, just think over time and the edge will work back in your favor. So don't put too much emphasis on a couple of losing trades. If you have any questions about this topic or you want to actually add to it and have a conversation, let me know. Please leave a comment below in the video, and definitely subscribe to the channel. I'd really appreciate it. Have a great day, everyone.